Hi guys, today we'll be solving illustration 2 of financial statements with the theory explanation. But before starting to the video, if you like what I'm doing, please subscribe to my channel and like my videos. So hello guys, today we'll discuss about the illustration 2 of the financial statements, chapter 4, CA intro. So there's a balance sheet given here of X Limited as on 31st March 2011. There is authorized capital. This is of preference shares and equity shares, and they have issued only 15,000 and 1,20,000 respectively of the preference shares and equity shares. Share suspense account. Basically, what is share suspense account? If any amount paid for the shares is collected, that is share suspense account. Reserves and surplus. Capital reserve in this 1,50,000 is revaluation reserve. So 1,95,000 minus 1,50,000 will be our capital reserve. So we should not take this revaluation reserve while calculating effective capital. Then securities premium account. They have given secured loans, 15% debentures, unsecured ones, public deposits, cash credits, and they have mentioned it as short terms. So if they mentioned it as short terms, the other will be of the long term nature. So we will not consider the short term and we will consider only long term while calculating the effective capital. Then current liabilities, trade payables, and assets. Assets is investment in shares and P&L account. Then share suspense account will represents the application money which is received on the shares on which allotment is not made. Shares is issued, but allotment is not made for that. And you are required to compute the effective capital as per the provisions of Schedule 5. Would your answer differ if X is an investment company? X is an investment company. So they are asking us two things. We have to calculate the effective capital, and will our answer will be changed if X Limited is an investment company. First, we'll see what is effective capital. What all comes under effective capital? Paid up capital, excluding the share application money or advance against the shares. So, excluding these share application money and advance against shares. So, only the paid up capital will be taken into account while calculating the effective capital. Next is share premium account. Share premium account we will consider it. Share premium is also called as securities premium. Next, reserves and surplus. We'll take reserves and surplus excluding the revaluation losses. Next is long-term liability. Long-term liability will take, but not the short-term liabilities. Debenture repayable after 1 year. Example of these loans. Next, so basically what it is saying is we will take the long-term liability excluding the short-term liability, and the debentures payable after 1 year will be taken. That is obviously the long-term liabilities. Next, all these minus investments. So if a company is in investment company, we will exclude this. But if it is a company, if it is a non-investment company, will deduct the investments, investment in shares, investment in debentures. We will deduct this. Next is accumulated losses. Again, deduct preliminary expenses written off. Only this much is called as effective capital. If you know this defection if you know this definition, you can solve any type of the problem because it says exactly what has to be included and what has to be excluded. Now we'll compute the effective capital. Computation of effective capital. Particulars, and they have given two conditions, like if X is a non-investment company. Non-investment company. If X is a non-investment company, if X is a investment company. So computation of effective capital particulars, they've given two scenarios. If X is a non-investment company and if X is an investment company. Anyhow, we'll not use the authorized capital. So just ignore it. Issued capital. Yes, we will take issued capital except this share suspense account because it consists of amount of unpaid shares. So we'll not consider this. We'll consider both of this. Equity share capital. 96 lakhs. And same will apply for if it is an investment company, 96 lakhs. Next is preference share capital, 15 lakhs, 15 lakhs. Only changes I will show in the next step. You can see it. The next point is reserves and surplus. So we'll take capital reserve, but in this revaluation reserve is there. So we'll exclude this revaluation reserve and take only the capital reserve. 1,95,000 and we'll take securities premium because it is share premium. So we'll also take this 1,95,000 and 50,000. Capital reserve, that is 1,95,000 minus 1,50,000 is 45,000. So it applies to both the cases. Next is securities premium is 50,000, applies to both the cases. In the secured loan, we'll take only long-term loans. So except these, except I mean till here it is loans. So this is short term. So we'll exclude this and we'll take all these three. 15% debentures, 65 lakhs, 65 lakh. Next is unsecured loans. So in this public deposit is 3,70,000, 3,70,000. Next, current liabilities will not take because it is short term. Assets. So as we told, we have added all the things. Now we'll deduct. We'll deduct the investments in shares and P&L account. This is accumulated losses or general losses. So we'll deduct this. So here is the point where they have asked for the investment company. So if it is a investment company, we will not deduct the investment in shares because it's main activity of the investment company. So we will not deduct it. Only the non-investment company, in the case of non-investment company, we will deduct this. So until here, we'll take the total. So 96 lakh plus 15 lakh plus 45,000 plus 50,000 plus 65 lakh plus 3,70,000 will be of 1 crore 80 lakh 65,000 both the side. So this is the total. Now we will deduct it. Deduct investments. So this is a non-investment company. So we will deduct here Investments is 75 lakhs. We will not deduct here. And the next is accumulated losses, that P&L account losses. So loss here is 15 lakhs 25,000. It applies to both the companies. So when we deduct 1 crore 80 lakhs 65,000 with 15 lakhs 25,000 will be 16 lakhs 1 crore 65 lakhs 40,000. Here will be minus 15 lakhs, sorry, minus 75 lakhs. This is 90 lakhs 40,000. So this is effective capital. This is how you will calculate the effective capital. Just simply know the know the definition. You will automatically solve any type of the problem. And you need to give a note, like all these debts are assumed to be long term debts, and we are not taking the suspense account as it is as it is having the share application amount. So that is enough. You will get good marks if you do like this. So guys, that's all for this video. I'm so happy that you are supporting me a lot. Thanks guys, thank you so much. Please also watch other costing illustration videos which is in detail. Please go and check my playlist. I've posted all such things in a separate playlist. Just watch it and support me. And if you want any other videos to be posted, please comment in the comment section. So I'll be most welcome to do all such videos which you request. So thank you guys. Please subscribe to my channel and press the bell icon for the notifications.